Let's go global with this, Jeffrey. It's the story of the morning, the coronavirus ahead of the Chinese New Year. How big of a deal is this for global economies and markets?
Well, the human toll is immeasurable, and we never know whether this is going to be the one epidemic that truly breaks out and has global ramifications beyond what we've seen in the past. But we have more than a dozen of these global pandemic breakouts over the last 20 or 30 years to take a look at the market and economic impact that they are likely to have. And in the past, we've seen they have not had much economic or market impact. In fact, usually 1 month, 3 months, and 6 months later, after the WHO declares it a global pandemic, stocks are up. And that's even true when the global economy was very vulnerable, like in early 2003 as the U.S. invaded Iraq and we were just ending that long bear market, and even early 2009. Of course, in 2003 it was SARS. In 2009 it was the swine flu, just at the end of that global financial crisis. Neither of those pandemics changed the trajectory of the global economy or markets. They did have costs, however, and looking back at SARS, that was a total global cost of $33 billion. But annually in the U.S., the seasonal flu cost $7 billion. So we know there are costs. We'll have to see how large these grow. But so far, I think it seems prudent to take precautions if you're a traveler, but probably not if you're an investor.
How vulnerable are global markets to a shock like this or a shock to the economy? I say it only because there are multiple markets around the world that are either at record highs or close to them. How important is this for the global economy?
It is important in the sense that the global economy is solely supported at the moment by consumer spending. We haven't seen CapEx come back. Manufacturing is still soft. We're just not seeing the fiscal spending that would support the global economy. So if this causes a retrenchment in consumer spending, not just in China, but around the world, that could be maybe that's sort of the weak link that kind of takes out the leg under this stool that's supporting the global economy. So it is important to watch.
All right, so let's talk about the earnings impact, though. Here in the United States, we are getting through earnings season right now. Are there any themes, signs that you see that point towards perhaps a stronger U.S. market in 2020?
You know, I'm looking at, I'm listening for signs about inventory levels. They're very high in the U.S. I'm not hearing a lot of concern about those high inventory levels from business leaders. And I'm not hearing about a big uptick in cost despite a very low unemployment rate. So that's encouraging on the cost and the employment side. But I'm also not hearing much about upward guidance to 2020. Remember, in the most recent CFO survey, many business leaders felt we were likely to see a recession this year. But we're not hearing a change in tone with regard to these earnings guidance towards the rest of the year. Not downward guidance, but not upward either. So I'd like to hear a bit more of that.